All-time high. BTC blasts through 70k before a slight pullback, leaving everyone wondering if a correction is coming or if it's up only from here. What comes next for Bitcoin?
Ethereum upgrade imminent. ETH hits 4K as the Denkun upgrade approaches, and speculation around its spot ETFs starts to rise. How high could ETH go in the next few days?
Meme coin craze continues. Meme coins of all kinds hit record highs, while new ones emerge, making millionaires and breaking apes. Why are meme coins rallying so much?
Nvidia stock blinks. The stock that's been leading the market falls 10% in the final hours of Friday's close. Are we about to see a massive market crash?
And a closer look at last week's top-performing cryptos and where they could be headed next.
All this and more in just a moment. Last week, BTC hit an all-time high of just over $70,000, surpassing its previous all-time high of $69.4 thousand. By now, you'll know that BTC's price action has been driven primarily by inflows into the spot Bitcoin ETFs, which saw record inflows last week, according to June analytics. And if you've been watching the charts closely, you'll know that BTC saw a sharp pullback when it hit its new all-time high, and that it saw a similar pullback when it spiked slightly above its previous all-time high a few days prior. This was, of course, fundamentally due to leveraged liquidations. Specifically, when BTC hit a new all-time high, a bunch of traders started betting that it would keep rallying. However, BTC whales, be they crypto or TradFi, simultaneously took profits around these levels, causing prices to dip slightly. This in turn caused traders who went irresponsibly long to get liquidated. To put things into perspective, there were over $1 billion of liquidations after BTC hit a new all-time high. That translated to over $1 billion of sell pressure, which took BTC's price lower. At the time of shooting, BTC is hovering just below its previous all-time high, and it has everyone on edge. That's simply because the crypto market is at a critical point where it'll either explode higher or see a much-needed correction. And funnily enough, it seems that the catalyst for either of these outcomes is the same. It all ultimately depends on those spot Bitcoin ETF flows, or rather, the investors behind them. Consider that the investors in the spot Bitcoin ETFs have yet to experience the 20 to 30% corrections that BTC has historically seen on its way to new all-time highs. Some would argue that the spot Bitcoin ETFs have decreased BTC's volatility, but the sharp rejections we've seen after BTC hit a new all-time high suggests this isn't the case, at least not yet. Rather, these recent rejections suggest there's an enormous amount of leverage in the crypto market, something that's underscored by USDT's supply, likewise hitting new highs. For context, USDT's primary demand driver is leverage trading. When you see Tether print 1 billion, that tells you that traders are taking on lots of leverage. So far, most of the resulting volatility has been to the upside, but it's possible that ETF investors will get their first taste of the downside risk in the coming days. That's because BTC seems to be painting an ascending wedge pattern on the daily, a bearish pattern that could cause a drop to around 59k. The catch is that all the leverage could cause BTC to drop a lot lower as all the longs get liquidated. Depending on the catalyst for this dip, the drop could be temporary or longer lasting. And as always, there's no shortage of catalysts to choose from: crypto regulations, economic data, inflation prints, etc. Now, if you're planning on trading BTC through what's likely to be another volatile week, then you can maximize your gains with the help of the Coin Bureau deals page. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $50,000 on the best crypto exchanges. These deals won't be around for long, so take advantage of them ASAP using the link in the description. Now, BTC's massive rally has managed to lift pretty much all altcoins, despite the relative lack of capital rotation. As the largest altcoin, ETH has been the biggest recipient of these rotational flows, and it managed to hit $4,000 last week. For reference, the last time ETH hit 4K was over 2 years ago. Time flies. Anyways, turning to the charts, you can see that ETH is looking similarly overextended to BTC on the daily, and also appears to be painting an ascending wedge pattern. A correction, in ETH's case, could take it down to around 3.4K, but remember that leveraged long liquidations could take it lower still. In fact, it's possible that ETH could surprise to the downside if there is a correction. That's because ETH BTC is looking very weak on the daily. This is surprising, given that Ethereum's Denkun upgrade is just 2 days away, and it begs the question of why we're not seeing more ETH strength. Besides the fact that the biggest beneficiaries of Denkun will be Ethereum's Layer 2s, it's possible that there are concerns around potential technical issues too. If you watched our previous Ethereum updates, you'll know that quite a few technical issues have arisen since Ethereum's transition to Proof of Stake. It goes without saying, therefore, that a technical issue related to Denkun would be very bad news for ETH. On the flip side, though, a smooth Denkun upgrade could be the catalyst ETH needs to get a boost both in fiat terms and BTC terms. This would be ideal, as ETH doesn't seem to have any other imminent catalysts. If you missed the news, the SEC once again delayed the spot Ethereum ETF applications. This is not that surprising, given that Bloomberg analysts have been saying ever since the spot Ethereum ETFs were tabled that the SEC will choose to approve or deny on the final possible date in May. As with the spot Bitcoin ETFs, industry players have started pressuring the SEC to approve the spot Ethereum ETFs much sooner. The difference, though, is that these industry players have come from within the crypto industry. Now, Bloomberg ETF analyst Eric Balkunas noted that the absence of asset managers in this equation may not be a good sign. In case you missed it, there had been lots of back and forth between the SEC and asset managers like BlackRock in the lead up to the spot Bitcoin ETFs being approved. This back and forth has been noticeably absent for the spot Ethereum ETFs, which is a part of why many experts are skeptical about whether they'll be approved anytime soon. And you can watch an interview that our CEO, Nick, did with one of these experts using the link in the description. On the flip side, however, there are many experts who believe that the SEC can't deny the spot Ethereum ETFs, and in particular, Grayscale's application to convert its Ethereum Trust into a spot ETF. That's because when the SEC rejected Grayscale's Bitcoin Trust conversion, Grayscale took the regulator to court and won. The only difference this time is that the technical rule change required for the ETH ETF is different for that of the Bitcoin ETF. It's further explained in that interview I just mentioned. What this basically means is that should the SEC reject a grayscale conversion, a lawsuit brought by the asset manager may not be as likely to succeed as its Bitcoin ETF lawsuit. Of course, dealing with the SEC is a step into the unknown in many respects, something we have come to expect from the regulator. Anyhow, while many experienced crypto investors have been patiently waiting for proper capital rotation out of BTC and into altcoins, it seems that degens have taken it upon themselves to go straight to the other extreme of the risk spectrum. Of course, I'm referring to the insane meme coin rallies we've seen lately. Insane is not an exaggeration either. Shiba Inu's market cap, for instance, is literally $20 billion at the time of shooting. This makes Shiba Inu just as valuable as Warner Brothers, or France's largest bank, or China's national railway company. Never mind all the other meme coins that have market caps in the billions now as well. Now, from our perspective, there are three reasons why this could be happening. The first is that meme coins are some of the most accessible cryptocurrencies due to all the exchange listings they saw during the last crypto bull market. This makes sense, but the thing is that only a few of these meme coins are in fact easily accessible. The second possibility, therefore, is that investors are becoming impatient waiting for the capital rotation out of BTC. Put differently, they're unsatisfied with the double-digit percentage returns most of the cryptos in their portfolios have seen since the start of the year, and they want something with a lot more alpha. Meme coins offer this alpha due to their usually relatively low market caps, while their low price tags give the impression that they could see enormous gains, at least for inexperienced retail investors. The thing is that there don't seem to be that many retail investors involved in these meme coins, especially those on Ethereum, where DEX trades cost hundreds of dollars a pop due to high gas fees. This ties into the third possibility, and that's that these meme coin rallies are being orchestrated by crypto whales. There actually seems to be some on-chain evidence of this as well. Some of you may have seen all of the incidents of apparent insider trading of meme coins tracked by on-chain sleuths like LookOnChain. In addition to the obvious profit incentives, it's possible that these crypto whales are purposely pumping up the prices of meme coins in order to prop up these smart contract cryptos they're on. The multi-year highs in fees and trading volumes that some of these chains have seen is circumstantial evidence of this possibility. The anecdote that comes to mind for us is the second Solana phone, which sold out due to the speculation that buyers of the phone will receive meme coin airdrops. FYI, the Bonk meme coin was airdropped to holders of the first Solana phone, an airdrop that was at times worth more than the phone itself. Whatever the case, it's more than likely, though, that this meme coin craze will eventually come to a close, and when it does, it will end just as quickly as it started. All we're wondering is where all of that capital will go. Believe it or not, but there's been speculation that traders will rotate their meme coin profits into regular altcoins, and at least therefore we would finally get a proper alt season in that scenario. Note that you can learn how to find promising meme coins using the link in the description. Now, while we're on the topic of assets that have gone parabolic, Nvidia's stock has gone vertical as a result of the AI hype. In contrast to assets like meme coins, Nvidia actually has some fundamentals in the form of revenue. Its position as essentially the provider of AI hardware means that it's likely to keep making mad money. But what happens when everyone already has the hardware that they need? This is something that people weren't asking themselves in 2001 when similar companies were selling internet hardware. In retrospect, the bursting of the internet hardware bubble made it very cheap to build out and adopt. It's quite possible that we'll see the same thing happen with Nvidia, and it's possible that the AI hardware bubble started bursting last Friday. That's because Nvidia crashed by more than 10% before the stock market closed, something that's apparently a bad sign in the stock trading world. What's odd is that there doesn't seem to have been a clear catalyst for Nvidia's crash. Our best guess is that it has to do with Nvidia almost hitting a psychological level of $1,000. It's likely that some large investors decided to take profits just before those levels, causing a crypto-style leverage long cascade. If you don't understand why this is so significant, that's because Nvidia is one of the handful of stocks that have been driving stock indices higher. These so-called Magnificent Seven stocks had recently started to splinter, with fewer and fewer continuing to perform well. Nvidia is one of the last ones. Now, when you combine this with the fact that billionaires have been selling billions of dollars worth of stocks, it does give the impression that they know something the rest of us don't, and that a market crash could be coming. And you can learn more about that by watching yesterday's video about it. The link will be in the description. But back to Nvidia stock. Now, you can clearly see that it is extremely overbought. A retracement to its closest zone of support would bring it down by almost 40%. This could have an outsized impact on the rest of the stock market, given that Nvidia is currently the third largest stock by market cap. The caveat, though, is something we've mentioned in our recent weekly crypto reviews, and that's that most of the flows into stock market indices like the S&P 500 are passive. In other words, the inflows are automatic and will continue until there's some black swan event that causes everyone to panic. Come to think of it, it's possible that BTC is now subject to the same dynamic, given that the ETFs are slowly but surely finding their way into different passive funds. Note that BlackRock recently announced its intention to add its spot Bitcoin ETF to its global allocation fund. Probably nothing. Anyway, with all that said, it's about time we looked at last week's top performing cryptos. So, Jessica, take it away.
Thanks, Guy. Last week's top performing cryptos were Gala Games, Pepe, Floki, Shiba Inu, and Fetch.ai. Starting with Gala Games, its Gala token appears to have pumped on the news that the project has partnered with AWS's gaming arm and Dell's gaming arm to run a gaming-focused hackathon. As you can see, Gala's price exploded late last week. If you zoom out, you'll notice that it is struggling to get above a key resistance level of around 8.5 cents. In the absence of an additional catalyst, it is likely that Gala will get rejected. Let's hope that it gets that second wind. Next up, we have Pepe, which appears to pump due to the ongoing meme coin hype. Pepe's daily price action suggests that it has hit a local top, but it could just as easily be retracing in preparation for another move higher. As I mentioned last week, the one big catalyst that Pepe seems to be missing is a Coinbase listing, which may or may not come. As for Floki, it appears to have pumped for the same reason, the ongoing meme coin hype. Like Pepe, Floki appears to have hit a local top on the daily, but could also be consolidating for another move higher. Also like Pepe, Floki is missing a Coinbase listing, which could be the catalyst for that second leg up. And it's a similar story for Shiba Inu, whose SHIB token also appears to be pumping for the ongoing meme coin hype. The difference is that SHIB is already listed on Coinbase and appears to be painting a triangle pattern on the daily. If SHIB manages to make a move higher, it's possible that the other meme coins will follow, so take note. Finally, we have Fetch.ai, whose Fetch coin appears to have pumped due to the announcement of Fetch Compute, a decentralized AI computing marketplace. Fetch.ai also announced that Fetch stakers will be airdropped new tokens related to the project's new product. Unfortunately, Fetch's daily price action looks very toppy, with bearish engulfing patterns on the daily. Given just how aggressively Fetch has rallied, it is possible that the correction could be just as severe, especially if Nvidia stock continues to fall, as Guy mentioned earlier.